Wake that ass up
Early in the morning.
The Breakfast Club.
Morning, everybody. It's DJ Envy, Angela Yee, Charlamagne the Guy. We are the Breakfast Club. We got a special guest on the line. He goes by the name of Matt Garland. He is a mortgage broker. Welcome, Matt.
What's going on? What's going on, guys?
Hey,
How's
Matt.
everything
what's up,
out there?
King?
Good, man. Good. Alive and blessed. Happy to be here.
All right.
There you go.
Now, I wanted to bring you on to talk about mortgages and forbearance and deferments and what people should do right now if they're having a hard time. A lot of people own condos or they own houses. What should people be doing right now as far as possibly not paying their rent so they can have some money to pay for food, to pay for groceries, to pay for, Pampers and all those other things?
I mean, I think first things first, you need to call your service and lender. Whoever is the lender you make your mortgage payments to, give them a call and see what programs that they're offering. Not every lender is offering the same thing. Some are offering forbearance and some are offering deferments, which is completely two different things. So,
What's the difference between the two?
So a forbearance is basically what they're offering right now is they're giving you 3 months suspended payments, right? So April, May, and June. And then in July, all 4 payments are due. The past 3 months plus the month of July is all due at the same time. And a deferment is when it's the same suspension for the first 3 months, and then that money is put in on the back end of your loan, or they break that up over a term, probably 6 months, 12 months, and increase your monthly mortgage payment. So you want to know the difference between the two and understand what those options are.
Now, does it matter if your loan is federally backed, or what's the situation with that? Because you do have to see, right, how you got your loan, your mortgage.
Absolutely. That's the main component of it, right, Angela? So if your loan is owned by like Fannie Mae or Freddie Mac, which is typically for conventional mortgages, those are the mortgages from what I'm seeing from my customers are actually getting deferred and put on the back end or coming up with some sort of payment plan. But loans that are not federally backed are the loans where people are getting forbearances, right? And I think that's where a lot of people may find themselves in trouble because let's face it, if you can't pay your mortgage over this 3 months, what makes you think you can pay your mortgage 4 months of mortgage in July? I think there's going to be a lot of issues coming July where people are going to need loan modifications. And if you read the stimulus package, they told lenders not to report people to their credit report if they take out a deferment or forbearance, but it said nothing about a loan modification. And a loan modification is typically reported to your credit report as a negative thing. So that can ruin some people's credit. That's almost like a foreclosure, so to speak.
Now, what about interest rates? They're saying that interest rates are at an all-time low. Is this a time right now where people should possibly be refinancing if they can? And are banks lending money right now?
Absolutely. I think first, yes, people should look into their options of refinancing, especially if you have like a FHA mortgage where you have PMI. Now you may be in a situation where you can refinance into a conventional mortgage and remove your PMI and plus get a lower interest rate. Also, folks who want to pay off their loan faster, now this is the time to think about maybe going to like a 15-year because 15-year mortgages are in the mid-twos. This is the lowest that I've seen 15-year mortgages in probably my 18 years in the mortgage business. Now, are banks still lending? Absolutely, we're still lending, but we're going to make sure that people have jobs, number one, and people have the ability to repay back loans. So there have been some restrictions or overlays that some lenders have put in place to kind of protect their business and their shareholders, which rightfully so they should. But yes, banks are still lending today, mid-April.
Yeah, I saw banks say that you have to have a 700 credit score and you have to have 20% or something like that.
Well, that's typically Chase came out with that, and a lot of the big banks like Chase, Wells Fargo, some of those bigger banks, they changed their portfolio loan products. Now, portfolio loans, Charlamagne, are loans that are not sold to Fannie Mae, Freddie Mac, or FHA, right? So the portfolio loans is what banks keep it on their books. They're not selling it in the secondary market. So Chase, for example, came out with that news, and they raised their criteria to 700 credit score for those loans. But let's look at where the criteria was prior to COVID-19. It was a 680 credit score and a 15% minimum down payment. And that's typically for folks who are buying luxury homes, like $1 million home, right? So what they typically did is raised it up 20 points and said, hey, you got to put 5% down extra, which I don't think that's really a big deal. Anyone who's buying a home that's $1 million plus is typically putting down 20+% or has over a 700 credit score. So that wasn't across the board, guys. That was just for portfolio loans. Now, most banks have raised their minimum credit scores for FHA loans, whereas pre-COVID, it was 580 across the board for any lender you would particularly go to. Now, most banks have raised it to 620 and some as high as 660 for FHA loans. So there has been some sort of restrictions added in place just to protect the banks, to make sure that they're not lending out money to folks who may have been impacted by COVID-19.
Now, what is the real estate market
are there
doing right
any
now? How is the real estate market? Is it going down? Is it up? Is it how does it look out there? Should people be investing or should they wait? What do you suggest?
I think the real estate market is still moving. I've been talking to realtors on my social media accounts on Instagram and on YouTube, and just kind of interviewing them, just kind of get a feel of what's been happening over the last 30 days in their markets. And most realtors are telling me the same thing, guys, that homes are still selling at almost asking price. Sellers are not desperate yet. So things are still moving according to plan. If you speak to any realtor, they'll tell you homes are still being listed for sales. Homes are still going in contract. I mean, we're still closing loans. People are still getting pre-approved. And I'll tell you, is this the right time to buy a home? I'll tell you, like I told you prior to COVID-19, if you are financially secure, if you have down payment, closing costs, and reserves, and you are ready and the time is right for you, I think you should buy. Because of those things. If you're not financially secure, if you think you want to have some issues with your jobs coming up, then you shouldn't probably be looking to buy. You should probably wait until you know you have a little bit more security.
So the rules still apply. Let me ask you this: Are there any forgiveness programs? I'm just asking for people out there. Is there anything they're doing where people maybe don't have to make a payment or anything?
What you mean
like
forgiveness? You mean like not pay at all?
Like not pay for a month? I'm just asking because there's all
Yeah,
kinds of
word.
programs.
Good question.
I mean, that's a great question. And I think banks are doing what they can to help people. I haven't heard any true forgiveness right now. I mean, there's a couple stimulus packages that's floating across the internet right now where they're trying to come up with mortgage cancellation and rent cancellation for up to a year. It hasn't passed into law yet, but I think there are some things being worked on by politicians to try to make it a little bit more easier for people going through this unprecedented time. But as of right now, no, there's only really forbearance and deferment options right now with the servicing lenders.
Is there any reason to go into foreclosure right now if you're really just like, it's just, even if I do this forbearance and I do any of those things, it's just not going to happen for me?
No one's going to foreclose right now. So foreclosures are suspended right now. And, you know, I think that's a good question. I think people are waiting for this whole wave of foreclosures to happen. I don't know if there's going to be an entitled wave of foreclosures happening in 2020. Right now, pre-COVID, it would take over a year for someone to get foreclosed on their property. I think right now, everyone's going to be a little bit sympathetic to people who have been impacted by this virus. So I don't think banks are just going to be rushing to foreclose people at the end of this year or even early 2021. I do believe there will be some foreclosures that come up in the future because of COVID-19, but not at scale like I think people are saying it's going to happen.
Gotcha. Now, what else would you advise people out there if they have a loan and they're struggling and they're going through things? Would you definitely advise don't do the forbearance if they have it and do the deferment if that's an option? Stay away from forbearance because, I mean, it's almost like a balloon payment. That's what, you was talking the other day. It's like at the end of that 3 months, if you don't have that 3 months, you're finished.
And I also feel like people should only take that if they need to. If you can afford to pay and you still have money coming in, you should still pay your mortgage. Isn't a time to be like, I don't feel like paying, I'm going to just wait. This is really for people who need it, right?
1,000% agree. I think people are going to try to hack the system and think they're going to try to get over, and they're going to wind up screwing themselves, especially if they're not reading the fine print. You know, most of my clients were just happy that they didn't have to pay a mortgage. I'm like, yo, did you read this? Right? And most of them, they didn't read anything. They're just like, oh, I thought it was free. And it's not free. So I would say this: if you really need the assistance and you've really been impacted, you lost your job, you got sick, you lost a family member, or whatever the case may be, yes, you should take whatever options are there because you really, truly can't afford it and you have no choice but to deal with the consequences at that time. I believe banks will try to help people who really can't pay back that money at that time, but, time will tell. But if you got the money, man, just pay the bills. For me, all bills are still being paid on time. I don't care what's happening, business as usual, because I don't want to get jammed up, 6 months, 12 months from now, because ultimately, I think people who are taking these forbearances, they don't really understand that it will show on your credit report as a forbearance, even if it's not marked late payments. If you're trying to do a refinance in the future, you may not be able to refinance in the future or buy a home in the future because you don't have a 12-month consistent on-time payment history. And I don't think people are really aligning those goals. They're thinking about today, and they're not thinking about what are their true real estate goals. So I think you got to weigh out all the pros and cons to this. And then also another thing that people are not talking about is your escrow account, right? Your property taxes, your homeowner's insurance. If you're not making a mortgage payment 3 months, 6 months, whatever it is, the bank is still going to pay those property taxes, right? So now everyone who is here is a homeowner, right? So every year you get an escrow analysis, and it shows that your taxes went up or they went down, and if they're including your mortgage payment, your payment is going to go up. So I think this is going to happen to a lot of people who are on these agreements, that their mortgage payments are going to go higher because those unpaid taxes are going to be tacked on too. So you really have to weigh out all the options before you make these decisions.
Absolutely.
Hey, question, Matt. What's the most effective plan to get through this that will benefit the banks and homeowners?
In the perfect world, Charlamagne, I would just say, look, man, banks, we're making billions of dollars every single quarter. I understand investors got to get paid, but I think, listen, just forget a forbearance. Just tack in if somebody needs 6 months, put it on the back end of their loan. If the government is going to print the money to pay the back-end investors to keep the system going. But I don't think no one should really be worried about mortgage payments or rent payments or what's going to happen after this, because this is really no one's fault. You can't blame anyone for this, right? This is a virus. So I think the perfect plan, Charlamagne, honestly, is just put it to the back end of the loan and let people kind of breathe and reset.
I agree.
Because we're all going to take a loss on this, no matter your wealth status, no matter your race, it doesn't matter. So we're all in it together. So I think that would probably be, in a perfect world, just forgive everybody. Student loans, credit cards, car loans.
Put it on the back end.
The back end of their debt.
Yep.
Yeah, and just call it a day. That way people are not thinking about this. Like, it's people dying. We're all in the tri-state, so we're seeing it firsthand how this is really affecting us. So who wants to be thinking about their bills at a time like this, or their job, or can they afford to get food? And these stimulus packages, $1,200, it's a lot of money to some people, but here in the tri-state, that really doesn't get you much, especially if you have children. So I think the $2,000 a month that they're trying to propose, I think that would be a good thing to help families. And, from what I'm reading, they increased the income limit for families, up to like $130,000, I believe, if you're single. So I think that will be a good plan, because you're getting to help more people, and you have teenagers like 17, 18-year-olds involved too, so now they can get money. So I think if they were to pass something like that where it could benefit everybody, the consumer as a whole versus just the big businesses, I think we can come out this ahead and the economy could be strong. 2020 is the year to reset, in my opinion. So why not just completely reset everything and just call it a day and print the money and pay the investors and keep the system going?
Right. How would that affect the market, though? Like, how would that affect the market if everybody was excused from paying mortgages and rents, everything for, like, let's just say the next 3 months or even the rest of the year? How would that affect the market?
Well, not excused. They would throw it on the back end. You still got to pay.
They still got to pay.
They still got to pay. It's just going to be on the back end.
That's what I said.
So if you have 20 years on your loan, it go to 21 years, right? On your mortgage. But I think that's why the government has to continue to print the stimulus money instead of trying to spread it out to, like, $349 billion was for businesses. That went in 13 days, right? It's just not enough money. So instead of trying to do things like that, why not just put all the money that you have and pay all the back-end investors that's buying these bonds, so that way, because, it's a little bit more sophisticated. I'm not trying to go over nobody's head, but just pay them so that way we can keep the markets going and everybody can kind of reset and get things started. I don't think it's rocket science, but who am I? It's above my pay grade. You know what I'm saying?
Okay.
On the other end, right, if you're a seller right now, what are some of the pros and cons for listing your property at a time like this?
Yeah, because I'm not having an open house where people walk in my house right now,
Yeah, I think that's the major con. No open houses, right? No traffic. So everything is being done virtually. People are still buying. I think one of the biggest fears right now for any sellers, if you get into contract with someone, will they have a job by the time you get to closing? So I think that's the biggest fear that a lot of my sellers that I'm working with have seen. I've had deals die because people literally lost their jobs the day of or the day before closing. So that's kind of the biggest fear that sellers are having right now. But people are still out there buying. People are doing virtual tours. People are making offers on these homes and getting into contracts. So I think the market is going to see some sort of decline, obviously because of COVID-19 and what's been happening. But I think once America reopens again, I think things will slowly but surely get back to what they were prior to COVID-19. Hopefully.
Right.
Yeah, I was thinking one of the biggest pros is that everybody is at home online right now looking at properties, and they have more time than they've had before. So I kind of feel like when things open back up, there'll be a rush to go see some of those properties in person that they've been just looking at online.
I agree with that, and that's why I said earlier I don't think there's going to be a crash like everyone is saying. People who are looking to purchase prior to this happening, they were out there in the market going crazy. You know what I'm saying? And now everyone's been in the home 30 plus days. Now people have cabin fever. They want to get outside. And if you have good credit and income, and with low interest rates right now being in the low 3s, high 2s in some cases, people are going to want to take advantage of cheap money and go ahead and get themselves a deal. So I think when America reopens, I think the housing market will get the kick that it needs. And God willing, there's not a second wave or nothing like that. But, hopefully things can get back to some sort of normalcy.
Question, Matt. A lot of people always talk about paying your mortgage off early, and they say that'll ruin your finances. They always say you should keep a little bit of mortgage. Is that true?
It depends on who you are, man. Different strokes for different folks, as they say, right? Some people, I know Angela just paid off her house, right?
Yes, and I'm very happy with my decision.
So some people just don't like debt, right? Then there's other people that want the financial benefits as far as the tax benefits of having the debt. Mortgage is not bad debt at all. It's good debt. So I think it just really depends on the person and what their overall goals are. It's not one size fit all.
Right.
It's like your fingerprint is unique to you. So if you are in a situation where you want to pay it off, then by all means, pay it off. Because if that's going to make you happy, then do what you got to do.
All right. Well, thank you for checking in, bro. We appreciate you.
Thank you, Matt.
Assets over liabilities.
Say that again.
I said assets over liabilities.
Your phone is chopping. She said assets over liabilities.
Yeah, that's a fact. Asset over liability. Shout out to Earn Your Leisure. Shout out to the Breakfast Club. I appreciate y'all, man. Keep pushing the narrative forward, man. Keep pushing the culture.
All right, man. Work on my refinance. I think I'm gonna refinance. I gotta wait a couple more months, but I'm gonna refinance too. Rates are too low. You got to. I mean, at 2%. Hey, shoot, definitely.
Yeah. I'll let you know when it's time, bro.
All right, brother. Thank you, man.
All right, guys. Be safe.
All right. Peace. It's Matt, the mortgage guy. It's the Breakfast Club. Good morning.